everybody. Kyle Mouchen here, Vice President here for the mortgage for American Mortgages for the Canadian markets. Thank you very much for joining us today. The point of our presentation today is to bring you value and tools to understand how to finance U.S. real estate as a Canadian investor. So we're very proud of here to look at how to provide you with the tools and knowledge. And then we'll go through all of those tools and pieces of knowledge. Then at the very end, we'll have a question and answer period. We'll have a wonderful guest, a co-founder of American Mortgages, Mr. Robert Chadwick, will be able to answer any questions, as well as myself in terms of the process for you. So here at American Mortgages, we're one of the only few places to have tools in order to help foreign nationals provide in order to get you applications across the border with relative ease. So how to finance U.S. real estate as a Canadian investor. So we'll go through a bunch of slides here that will provide the statistics, programs, anything to do with our suite of programs here at American Mortgages. So we'll go through, who is American Mortgages? You've seen a lot of our videos, LinkedIn, Facebook, Instagram, been inundated with this presentation. We'll go through the why of who we are and what we do. And then also about the background about myself, how I can be able to help you with anything when it comes to American Mortgages here in Canada. Then we'll go through statistics, and then also some Canadian news. Over the last couple of years, it's been very difficult for investors of Canadian real estate. So we'll go through why the US versus Canada, and then we'll go through the application process, how easy it is to look at having our 15-minute interview to getting you the mortgage application and conditional approval you need and the confidence in order for you to go buy real estate. And then next we'll go through our loan programs, and then at the end we will look at question and answers. So Canadians in the US market, $6.6 billion spent on real estate, rental and permanent residence between April in 2022 and March 2023. Number two, as the second top foreign buyers of US real estate. Being so close to the border, why not? Then 55% of those purchases, you're looking for somewhere warm there, Canada. So you know how cold it can get definitely in Ontario or Winnipeg or even in Montreal. You're looking at Florida, Arizona, and California to get away from, you know, the frigid temperatures of the winter. So some facts here from the different associations, as you can see. So fewer homes were built over 10 years following the US crisis than in any other decade since the 60s. As of the fourth quarter of 2020, the US has had a housing supply deficit of 3.8 million units. The National Association of Realtors projects that the housing deficit is closer to 6.8 million homes. And also we find that a 30% increase in the monthly number of homes coming onto the market would have been necessary to keep up with the demand of the pandemic. So just some facts there. Why American Mortgages? We're 100% working with individuals living and working abroad. We only focus on foreign nationals and US expats, and we have representation in 12 different countries, so time zones is not an issue. Culturally sensitive with 7 different languages and understand any sort of cultural nuance in the interviewing process with you. All loan programs do not require US credit. So we'll probably ask for a credit bureau report from your home country in the language that we're doing your mortgage application in this case, English. Common sense underwriting, very straight approach. In Canada, as you know, that when you're doing a mortgage application here, sometimes you're asking for a lot. With our common sense underwriting approach, we're not going to be doing that with some of our programs. Our programs are also simple and easy to understand, no age limits or restrictions, interest servicing only facilities, You can go 40 years versus Canada, 30. Loans in all 50 states, transparent fees and process. Also 24/7 processing of your mortgage as well. So we're always working to make sure that we're meeting and exceeding expectations in terms of your deadlines. About myself, 10 years here in financial services and leadership experience. Loved mortgage origination. That's why I came back to it, and looked at American Mortgage as an opportunity to provide value for truly borderless lending solutions. I'm a former senior leader of mortgage specialists for the Bank of Montreal, overseeing a team of 25. It was a fantastic experience, but with that came opportunity to look at American Mortgages in order to help, and really missed the mortgage origination side. I'm based here on beautiful Vancouver Island with my spouse and 2 children. We're located here in the Cowichan Valley, if you're very familiar with it. So why invest in the US versus Canada? Larger, bigger, better, diversified economy, global influence, being the #1 economy in the world, and as well as #1 in real estate markets, and also known for its innovation. Look at the top tech companies and airline companies located in Washington State, to Tesla, Microsoft. Don't even have to go any further. Lower taxes than Canada. I think that really comes up with when you hear lower taxes, you're putting your ear and listening for sure. Favorable tax treaties as well. Stronger currency, a 30% difference of in terms of the income itself. Also, it has reserve currency status with different countries around the world. So we've heard a lot about government intervention in the housing area due to some challenges with affordability. Could be supply, we don't know. But here's some, pieces from around Canada. So in British Columbia, for example, a ban on non-resident short-term rentals from May 2024 on, $3,000 a day you could be fined. In Ontario, short-term rentals are allowed for only essential workers and travelers needing housing for at least 2 weeks, and Airbnb is not allowed. In Quebec, a 3.5% tax on short-term rentals on the price. Operators must display government registration numbers on their ads and listings to comply with local regulations. There's more. The federal government is now putting some rules in. The Minister of Housing has hinted at a national regulation for short-term rentals, affecting platforms like 𝐉𝐴 and Airbnb. Tax changes when it comes to the CRA. The CRA limits income tax deductions on short-term rentals in order to tackle the housing shortage. From January 1st, 2024, no tax deductions for short-term rental expenses in restricted areas. So impacting again Airbnb and 𝐉𝐴. Further, if you own a trust or have some sort of holding company, the underused housing tax has been really hasn't been talked about as much. There's a federal 1% tax on vacant or underused houses in Canada, like BC. Right now, you're all filling out any sort of vacancy reporting to the provincial government of British Columbia. So what does that in terms of its application? It targets foreign national owners, may also apply to certain Canadian owners like partners, trustees, and corporations. Calculation exemptions based on the assessed value or recent sale price. Exemptions available for specific entities and situations. But if you don't comply, CRA is going to be knocking at your door for getting some sort of penalties, which could go from $10,000 fine if you haven't registered yet. And obviously they're changing as well. So please talk to your accountant here in the next little while, because the deadline is coming up for personal income taxes at the end of April, and in June for business for self customers. Popular places to purchase real estate. Obviously, the biggest one, we all love Florida, especially you Eastern Canadians, you Quebecers and Ontarians. Very popular, very warm retirement areas, offer diverse options at affordable price, and also a large Canadian community. Arizona, preferred by Canadians for its dry, mild climate, especially for its winters. Gotta love the Grand Canyon, super dry, Monument Valley. Then also you can probably watch hockey games a lot cheaper than going to the Leafs games or Vancouver Canucks. California, biggest population size of Canada, 36 million, literally same size as Canada pretty well. Diverse lifestyles with oceans and mountains and forests and vineyards, lots of business and entertainment opportunities with Hollywood being nearby. Range of properties for people that want to go there, and then also some prices in some areas are also a little bit higher. Who would have thought Louisiana, with a rich French history, unique blend of influences, right near the ocean, has its own culture as well. So really fantastic to see there, especially during Mardi Gras. Montana, close to Alberta, beautiful nature enthusiasts with an abundance of outdoor activities for you hunters out there, even you skiers. Offers landscapes, mountains, lakes, rivers, and also in comparison to other states, very low population. Also, one state that you wouldn't have thought about, South Carolina. Appeals to Canadians for its charm and also its hospitality and mild climate. Sandy beaches, can't go wrong. Also, its rich history. So, U.S. mortgage overview. What does that mean to you? Again, no credit required. That little AUM there. So you don't have to take money from your bank account and leave it at a bank in the United States. So assets under administration, you don't have to worry about that. You can keep your hard-earned money where it is, where you are. Foreign income is allowed. Loans and programs in all 50 states. Some other pieces to really consider and focus on. So you're Canadian, you're considered a foreign national. So that means that you can purchase up to 75% loan to value or 25% down payment. So if you give us the proper documentation that's requested, we'll be able to give you a loan approval in 72 hours. We can close your mortgage application in 30 to 45 days, can sign at any sort of local U.S. embassy, or we do have some alternative options to help make the process painless. We can also do a purchase, refinance, or equity release, whichever is the need. And we can go 30-year amortization regardless of age, 10 years servicing only facility, and loan programs without income is available. And then the one thing that we're very proud of here at American Mortgages, 97% of the loan applications that are submitted are approved. And we're truly 24/7. You contact us on our website, americanmortgages.com. You click on our website if you want to have a chat at 2 o'clock in the morning. There's someone there for you to chat about U.S. real estate. Let's look at our loan program, shall we? So here's the process. Number one, you talk to me. Second, we choose a program after our initial conversation and/or consultation. Third, you provide the relative documents, and then I provide you with the loan approval. Number 5, we review your loan approval with the loan officer. And then 6, we order the appraisal to make sure that whatever you are purchasing, that the value matches market value. We'll look at underwriting conditions. We'll communicate you throughout the full process. You will receive emails to make sure that we're clarifying the certain pieces for insurance, all those pieces, making sure that your application is nice and clean going through, and that we're working with the lender to make sure that they're satisfied with their conditions as well. And then probably the best part, signing is arranged, and then the money's out the door and it closes and you receive your keys in your hands. Some of our programs, one thing I'm passionate about is the AM rental coverage program. No personal income is required. We qualify only on the property's projected rental income. Yes, only on the projected rental income. No U.S. credit or residency is required. So if we go back on some of the slides that we had, Canada, most of the major provinces have some sort of restrictions. Loan amounts are from at least $150,000 to $3 million. So that's a big part of the market. Some loan structures, for example, we have a 30-year fixed and interest only facility available. And again, we close in 30 to 45 days. How do you qualify? You don't even need 1-to-1, 0.75 to 1 for your rental coverage. So total mortgage payment, principal, interest, taxes, and insurance, $1,000. You only need $750 of income in order to qualify for this. Fantastic. The investor program. So we can use foreign income, but tax returns aren't required. I bet you're going, what? I don't need tax returns? We qualify based on income letters from either your employer from your home country or accountant. We use a 2-year average. We can go into the particulars of that particular program later. We don't need any sort of U.S. credit or residency. Again, loan amounts between $150,000 to $3 million. 30-year fixed and interest-only facilities are available, and 75% financing for new purchases. And again, we can close in 30 to 45 days. Again, how to qualify. You're reporting $10,000 on your letter. Your mortgage payment, taxes, and insurance can't exceed 43%. In this case, $4,300. Do a bit of analysis. Debt to income ratio, or in Canada, TDSR. So for you bankers, mortgage brokers out there, total debt servicing ratio. In the US, it's called DTI, debt to income ratio. So if you are a US citizen living in Canada, so I'm sure you've been through maybe even a couple of applications. So for us, we ask for 2 years US income taxes, only the same as if you were working in the States, so you'd qualify under the same criteria as if you were living there. No US residency is needed. US score of 680 or higher for your FICO score, and again, 150,000 to $5 million for that. And then also 30 to 45 days closing as well, in case you need to have that rush. And again, expectations should be a little bit different between Canada and the US when it comes to closing your mortgages. 30 to 45 days is considered lightning fast. So just to kind of put that little tidbit out there for you. So how does it work? $4,300 if we're going to consider mortgage payment, taxes, and insurance. Gross personal income based on a 2-year average, based on your US tax returns. So your 1040s, your W2s, W4s can't exceed 43% for the DTI, in this case, debt to income ratio. If we were to translate it to Canada, total debt servicing ratio. For some of you investment advisors, if you want to use portfolio, we can utilize that over a 2-month average. So if you have customers at a high net worth, wants to buy this huge mansion in Florida, but worried about qualifying, it's not so bad. You don't have to take the money that you're controlling. You don't have to give it to the bank where we're going to be placing it. No US credit is required as well. We'll ask you for a borewell.com statement, Equifax from your local province, or you would provide that. Really easy to get. Loans up to from 3 million to 100 million. And then again, closing within 30 to 45 days. American Mortgage's high net worth program will take the average of the portfolio at $5 million divided over the fixed rate term. Let's use 5 years for an example. If the mortgage payment, tax, and insurance don't exceed $80,000 in this case, $83,333, you'll be able to qualify. So some of you have, grade 12 student doing their MCATs, doing their exams. They're looking at some of the US states or schools in order to have quality education. You can qualify based on projected income and have your child essentially live in the property. So also we can have them on title, and some net benefits of that would be if they were to provide, or if they were to stay and get the residency, it helps them open the door for getting their US credit score established. Some thresholds to meet: loan amounts between $150,000 and $3 million and 30 to 45 days to close. Qualification: rental income and the property expenses have to match at least 1-to-1 for this particular product. So in this case, $2,400 for the income. Principal and interest, tax, insurance don't exceed $2,400 as well. 1-to-1 coverage, we're approved. Fantastic. A little bit more sophistication. So we do have commercial-based products, multifamily units with 5 units or more. So if you have 6 or 7 units in heritage homes, because heritage homes are normally built huge. And if you're subdividing the units inside it, you'll be able to qualify for our AM Commercial Plus program. No personal income is required. Non-recourse is available. No US credit is required. Available between $1 million and to $100 million in communities across the United States. Portfolio. So you have more than 10 US properties. You need a mortgage. You don't want to provide essentially all your paperwork just for the one house. We can cross-collateralize most of your portfolio with 4 properties or more. Again, no personal income is required. Loan amounts between $250,000 to $1 million in this particular case. And 40 to 60 days need a little bit more because of the complexity of getting all your tax returns, Excel spreadsheets, organizing it, and sending it to the lender on your behalf. So some information here about us here at American Mortgages, where we're located, and then my information at the bottom. You can reach me at kyle.mouchen at americanmortgages.com, or you can reach me at 778-838-9654. And then we'll have my Calendly link if you would like a consultation in regards to this particular presentation as well. So that's our presentation for today. We'll be opening up a Q&A here with Mr. Robert Chadwick, who's the co-CEO and currently joining us right now. So really fantastic to have the amount of audience here today, Robert. So we do have a series of questions and people in the chat here. So how are you, Robert? Let's talk about how you're doing today.
Yeah, I'm well, Kyle. Thanks. Great information. Especially for me to see the challenges that even Canada has these days when people are looking to invest in real estate domestically. Our clients in general are, more sophisticated, more educated, more affluent because they are smart enough to look at markets outside of their natural market. And I think, you represented this perfect, the advantages the U.S. real estate market has, not only just Canada, but if you talk about global markets, no stamp duties, all of these things that really impact the opportunity for a borrower to get wealth or to create a viable portfolio that they can sell at retirement, take passive income, or even pass it down generationally. The U.S. is by far the best market.
I would agree. After I had my own rental transactions personally, paying land transfer taxes to the local province. There's part of me being a citizen. Definitely taxes are required. But sometimes having an extra $30,000, some people may not have that in order to pay for their house, right? And seeing where historic lows during the pandemic to where it is today, every dollar is being counted for cash flow and everything like that. So totally agree with you, Robert, on that. Looks like we got a bit of questions here. So just going to open it up here and we'll take a look. So we got Anthony Galano here saying that can Canadians sign mortgage documents remotely via DocuSign for properties purchased in New York? Yeah, we can. So we utilize some services depending on the lender that we choose. They can be done through notarial means, through online services. So we'll take a look at that. Which is fantastic. So yeah, definitely a lot of flexibility there for you to sign from home. But definitely a lot easier would be to go to the local American embassy if you're in a major city like Vancouver or Toronto.
I'm sorry, Kyle. Let me expand on that as well, because I think we see this a lot. You and I, as clients are, whether they're in Canada or anywhere else in the world, where do we sign? Canada is quite unique because it is actually very close to the U.S. You will see maybe a lot of people that will fly over to the U.S. to sign, which is perfectly fine. But we've got a multitude of ways for people to sign their mortgage documents as conveniently as possible. So certainly, if a remote notary is allowed, so a RON, so you kind of like signing it over Zoom, then that's possible depending on the country that you're in and the state that you're obtaining the mortgage. But you can also, if your country is part of the Hague, you can sign with an apostille, meaning that you can go to your local notary and sign with your local notary, and then that local notary actually gets it apostille stamp, and it's normally at the High Court or whatever the regional thing is there in that country, and that's sufficient, and it makes it a very easy process for the borrower. Certainly going to the U.S. Embassy if it's convenient, or the consulate, is absolutely an option, but we've tried to provide the availability for you to sign in a multitude of ways, depending on whatever is the most convenient for you. So I think, yeah, Kyle, you've had various experiences with this, but anytime that your clients want to sign and they have a question about how do we do it, it's best speak to your loan officer and do it from the very beginning and kind of already set up the structure, because U.S. Embassy appointments, just like anything else, is not always available and easy.
So Canada, local notary's fine. We'll look at it as a one-off basis and get you some clarity on that being so close to the border, really nice. For example, I can take a ferry across to probably Seattle from where I am in the world, right? So second question, Robert, which is got a lot of questions here. It's really, really nice here. So as a Canadian, what would be the best way to register a property using company or personal?
Yeah, a lot of people these days are using a limited liability corporation. An LLC is probably what it's better known as. Excuse me. It gives you a variety of protections, whether it is some sort of tax protection, some sort of asset protection in case, or personal protection in case maybe somebody gets injured in the property that you're renting. There's not a direct path to you. They're just going to go into the LLC, and however that works with the attorneys. But this is the most common way to structure the ownership of a property. So what it means is the borrower themselves are responsible for the mortgage, like anything in Canada is the same exact thing. But the ownership of the property, or how the property is held in an entity. And it makes it a very easy process. And again, this is one of the great things about U.S. real estate investing.
Excellent. Just to translate that to Canadian, so if you have a holding company and you have a slew of properties with a big chartered bank, Bank of Montreal, Toronto Dominion, RBC, you'll have a personal guarantee on that, making sure it's non-operating. So essentially that translates to limited liability company, and then you would be guaranteeing the mortgage on that as well. In terms of operating, I don't want to get too far. I don't have my CPA. So again, you may want to get some tax advice through a cross-border specialist, or you can go to our website, americanmortgages.com, go to the concierge, fill out our tax advice form, and then we'll have one of our partners get a hold of you in due course. All right, so third question today. How do I go about opening a cross-border bank account, and would American Mortgages help me with that? So definitely, my spouse is from Japan. I have multiple currency accounts with �Wise.com. Open up utilizing the US dollar piece. It does qualify as well. And if you need help with that, all of our loan officers will have a particular way of assisting you. And or if you would like, if you want to go, and if you're in Southern Ontario, you want to travel to New York, just go to your local bank nearby, and you can also open up a bank account there. Our fourth question today: are there any preliminary steps I can take to make sure the approval process goes smoothly? Robert.
Oh, super, super good question. Obviously our whole business model is the customer journey needs to be smooth. Right? I mean, that's really what we focus on. So the first thing you do before you start looking for real estate at all is to make sure that you get pre-approved for a loan. I mean, you want to know how much the payment's going to be, what kind of interest rates you are, what kind of terms you qualify for. One of the things, and Kyle had talked about this earlier, that we're super proud of is 97% of our loan applications get approved. And normally if they don't get approved, it's not an issue with the borrower. It's normally an issue with the property that they're trying to buy or refinance. So making the process, following what the loan officer or what our processing team sends you, and responding to emails, in a timely manner, will make the process as smooth as possible. All of our loan officers, and I think this is imperative if you want to be successful as a loan officer, needs to be super organized. And we realize that not everybody works that way. I mean, I'm actually probably not as organized as I should be, but as long as you're following what the loan officers say, and our loan officers have exceptional training, and this is all they do, 100% foreign national or expat lending, the process will be smooth. Certainly, like anything, there are maybe some bumps in the road, things that come up that we're not expecting. But again, because this is all we do, we try to foresee this in the beginning. So to answer the question maybe a little bit more clearly, I think following what the loan officers instruct or the processing team instructs in a timely manner will make this process go as smoothly as possible.
Excellent. Thanks, Robert, for that. Another question. We got 18 of them in full, so hopefully we got enough time to get through them here. So how long will it take for a non-US resident to get pre-approved, and how much does a pre-approval cost?
Well, the great thing is it costs nothing, except for some time. Our documentation, as Kyle had pointed out, is very simplified. Because we're doing loans for borrowers all over the world, whether they're from Sydney to Shanghai, we've tried to make this process as simple as possible and with as limited paperwork to actually, make it a viable, I guess, common sense loan, but without over cumbersome of, having to go through 10 years of tax returns and dissect this and that. The loan process, once you send in the documents, takes about 72 hours, I think, Kyle, right now, to issue a loan approval. Once you have that loan approval, this is what is really awesome. Once you have that loan approval, we issue you a letter. Once you have this letter, this is powerful. This letter, when you find a property that you want to buy, you turn this letter in with the offer to the realtor, and that realtor knows that Kyle is behind you, American Mortgages is behind him, and you have the mortgage financing in place.
Excellent, excellent. So free, zero investment of your time to make sure that this goes smoothly. And communication. Communication is really good too. Okay, so our next question here. So as a foreigner or non-US resident, what is the max loan to value available, and is the loan to value dependent on income?
So again, really, really good questions. The max loan to value for a non-US citizen is 75%. And that's across the board, which is really, really good. The LTV, there's two ways to qualify. Kyle had touched on one of our loan programs, which we're super proud of, where it is pure common sense underwriting. The way a rental property should qualify is based on what the rental income should generate. I mean, it just really makes sense, right? So we have a loan program that qualifies on the rental income of the property, and how we find what that rental income of the property is a third-party appraiser, just as they would appraise your property when you're purchasing. That also protects yourself to make sure you're buying it at the right price, and for the lender to make sure that they're lending at the right value. But it also gives us a very accurate indication of what the general rents are in that area. That's what's actually used to qualify. So there's no funny business. It's a very pure common sense underwriting on these loans. A lot of people think, oh my gosh, they're not asking for income, what's happening. But if you think about it, this is the logical way that you should underwrite an investment property. And then if you were to go on, does it depend on your income? If you'd like to provide income, rather than providing your tax returns and your end of year statement, we have a very simple way of doing this. And again, this has to do, because we're doing this in various countries and various jurisdictions, doing it through tax returns would almost be impossible and time consuming. We have a template, and Kyle would send you the template once you start the process. And that template is very straightforward. It says current year to date and last 2 years of your income. That has to be completed by your employer if you're employed, or by your accountant if it's self-employed. Again, simple, easy, common sense ways of buying or obtaining a U.S. mortgage for investment property.
Excellent. Translation, line 150 of your notice of assessment from your T1 generals. So hence, just translating here for you folks that have maybe complicated lending, or if you have your T2 generals from your corp, or if you have audited financial statements with review engagements or notice to reader, we just take your gross for the 2 years, and then a year to date, maybe even based on your bookkeeper providing that to your accountant to validate. And then that's all we need. We don't need to have a stack of 40. We don't need to take the French returns from Quebec, as they're a little bit different than the normal English returns as well. So simplified approach, letters from your accountant or your employer. Next question.
Go back to this. Think about this, Kyle. So Canada things are in English and it makes sense. And or maybe Quebec might be a little bit different, but can you imagine having to look at tax returns from, you know, the variety of countries around the world with people that have interest in buying U.S. real estate? I mean, again, this is like simplified, smart underwriting.
Like England, Singapore.
Right, exactly.
Right? Like how the stacks are. And then you get, you know, you have to translate it with a letter at the front from, like, say, Japan, and all of a sudden, same thing. Like, it's a little bit more, but not that much. But I wouldn't want to go through pages.
I agree.
So it appears that we have two questions from the same individuals. So who pays for the appraisal and what is the interest?
So the appraisal is paid for by the borrower. And you know, this is it makes sense, right? This is all the appraisals in the US are done by a third party. It's all handled by AMCs, appraisal management companies. They actually bill you directly. Never is there ever any money sent directly to us. Everything is either done through a third-party escrow or a vendor like a appraisal management company. So you would be responsible for paying the appraisal, but really that's the only cost that you would have out of pocket initially when the transaction occurs. As for the interest, it's really reliant on a variety of things. How you qualify. So whether you're going to qualify just off of the cash flow of the property, you want to qualify providing an income letter, you know, you're a U.S. citizen, you're a foreign national. It's based on your loan to value. There's a wide range of what the interest rate is. But what's so fantastic about that is if you want a lower rate, you just comply with whatever the requirements are on our program. If you're not so rate conscious because you know you want to buy a property now before interest rates go down and property values go up, then you take it at the most favorable terms for you, but maybe at a higher rate, and then you just refinance down the road.
Excellent, excellent. So hopefully that answers your question, viewer. Next question is, does anything change if I have an LLC? So I think we went through that a little bit there. So nothing changes except for your guaranteeing, and it's on title. So then also please get your proper tax advice either through the concierge tab on our website or go to your cross-border account within your local jurisdiction. Next question. If I already own 4 properties in Canada, am I eligible to get financed from us? Is there a limit of properties owned?
That is a super question. And before I actually answer that, if you look at the group chat in the webinar, you can see a link to book a meeting with Kyle directly. So after this webinar, or even actually during the webinar, if you want to arrange something on his calendar, and Kyle's calendar is open very early and very late, as I can attest, you can arrange something directly through the chat. But to answer the question, there are no limits to the amount of properties that foreign nationals can own in the U.S. What also makes this quite interesting, there are no limits on the loan to value. So whether you want to buy one property or you want to buy hundreds of properties, you can still obtain the maximum loan to value, depending on what you choose. In most cases, it's 75%. But it does. There's no restrictions on it. And again, you know, I'm currently based in Singapore. You know, again, because all of our clients are global, we try to make sure that our loan officers are also global and understand the market. But countries like Singapore, for example, have a variety of cooling measures, which makes absolute sense when you're talking about a small country and high real estate prices, or as you've seen in Canada, Kyle, the real estate prices are going through the roof. You know, and a lot of it is, you know, people are more affluent, but also a lot of foreign investors are coming in. And so they need to put certain restrictions. The U.S. is a free market society. They're a free market when it comes to real estate. They're not going to put restrictions on you know, seeing properties appreciate, seeing rents appreciate. You know, certain states there may be rent control and so forth, but don't buy in there. I mean, that's what you have 50 states to choose from. You have hundreds of cities. Find something that works for you and then buy that. So anyway, again, to maybe Kyle, you can translate into Canadian for me, but it's unlimited.
Foreign buyers ban, guys, Canada. Like, well, you got the ban now extended for another 2 years. So to Robert's point, free market over control. We don't need to get into any further examples on that. So thank you very much, Robert, for that answer. A couple other questions on a follow-up here. So what are the fees that we charge, and what are the range of the current rates, sorry?
So we charge a very standard market rate of 2% of the loan transaction. That is only paid at closing. So if for whatever reason you don't fall into that 97%, you wouldn't have to pay anything except for maybe the cost of the appraisal for the transaction, but you own that appraisal. We don't own that appraisal, it's yours. So that, it's very standard across the US. Interest rates for foreign nationals, I think the easiest way to figure it out is about 1% higher than what a US citizen would pay if they were buying an investment property. And we, again, it's really dependent on loan to value and how you qualify and so forth. But I think right now, if you're looking at rates in the eights, sometimes in the sevens,
yeah.
But it's still fantastic. And we've been really pushing this narrative for a while, and not to kind of go on a tangent, but interest rates will come down. And in my personal opinion of almost 30 years of mortgage lending, as we get closer to the election, this will be used as a tool to boost the economy and the confidence and so forth. It's important to buy now. Once these rates come down, all of these people that have been sitting on these really low interest rate owner-occupied properties that have wanted to upgrade, or all these people that have been waiting to buy their owner-occupied property, are just sitting on the sidelines. As soon as rates go down, property values are going to skyrocket again. And if you buy before that, you're going to immediately see some equity. So, and refinance later.
Yep. So speaking of skyrocketing, if you're in Houston, you may have a problem near NASA, near Cape Canaveral in Florida. If the values are there, the rockets are going up too. So take advantage if you can. Some other questions here. So is there any prepayment penalty?
Yeah, it's a good question. It's asked all the time. It makes sense. You would be concerned about it. On most investment properties, there's anywhere from a 3-year to a 5-year prepayment penalty. This can be reduced. It can be bought down, so you can pay a fee to the lender to reduce it. I think when you talk to your loan officer, the most important thing is to just have clarity on what are you going to do with this property? Is this, I'm going to hold it for 10 years and really the prepayment penalty doesn't matter. If you're going to hold it for a couple of years, then you structure it that way. And then again, that's what makes us really good at what we do. And Kyle is absolutely fantastic of, taking all the particulars of a client and finding out exactly what they want to do, not just today, but what they want to do in the future with their investment property. We're here for your journey, not just this one transaction. So certainly, yeah, there is a prepayment penalty. There are ways to mitigate it. There are options to actually even remove the prepayment penalty, but it's important to look at what the process is and how you want to handle the property now and in the future.
Definitely, to our viewers, holistic conversations is critical to make sure that we understand your future and what your investments are going to look like. Not putting the bank hat at all by any means. I'm just using our experience as an organization and a relative experience to emphasize the confidence that we need to ask, what does the future look like for you when going through these transactions? And then we'll provide you with the best avenue possible to again, banker's term, mitigate what the future would look like for the customers. A couple more questions here. How about restaurant businesses with property? Rent is 14 grand, asking price for 14, or asking price of 2 mil. How do we calculate it?
Yeah, again, Kyle, you're really generating some great questions. This is something we've received many times, not just on restaurants, but gas stations seem to be a very keen thing to acquire. Unfortunately, we only do real estate lending. So if you want to buy a restaurant, it's possible to be able to lend on that building that restaurant is in, but being able to provide a business loan to purchase that restaurant, there are options that are probably out there. It's just not something that that we deal with.
Excellent. Another question. Can you get a mortgage in a U.S. C Corp?
So yes, not the mortgage. You can hold the title in a C Corp if that's what you choose. Kyle had stated this a few times. It's important to talk to your accountant and see what's the best structure. Now, when you say, can you get a mortgage in a C Corp? So the mortgage itself is given to the individual. So whoever the borrower is, that's actually who has the mortgage. How the title of the property is held, that is what what can be in an entity. So again, if you don't have a CPA, we have an awesome CPA that we use on a regular basis that, much like us, his expertise is in foreign nationals and U.S. expats. So if you want the referral, you can go to our website and go to our concierge page, or you can message Kyle directly or email Kyle directly, and he can give you the CPA's contact.
Or even WhatsApp. So
yes, exactly.
Any sort of tool. So we got 4 more on the go here. So get down the list. So what are our commercial mortgage rates, and how many basis points over the 10-year treasury?
Again, good question. We do have a commercial loan specialist on duty. He spent 10 years doing commercial mortgages at Wells Fargo. American citizen living in Asia, super knowledgeable. I would suggest after this webinar, you reach out to Kyle or reach out to our company, and we're happy to put you in touch with Nick. Again, I probably should know this right off, but I don't. I apologize. But he does. And again, that's the great thing about you have a question about Canada, how you structure it as a Canadian citizen. You have a question about somebody in Europe, somebody in Asia. We have people all over the world. And that's, what makes us unique and actually makes us quite successful with this.
Very, very good. Very good. Hope not answering your question, but we'll be able to do it with some of our other individuals that are on our staff there. Another question here. So what is the maximum loan to value a Canadian can get on a DCR loan, washout refinance for 2 units or more?
So if you're looking to cash out, you should be able to get 70%, assuming that the rents, excuse me, that the rents are sufficient to cover the debt servicing.
Excellent. Next question. Does approval guarantee funds release? How reliable is it by itself? And is it binding?
Very, very good question. So our initial approval letter that we receive, or that we give to you after you provide us all your documents, is a pre-approval letter, meaning that we've gone through the process, we've put you into underwriting. The underwriter says, okay, based on what they provided, this loan will go through. Now, there are always, like anything in the world, there are always things that come up. Maybe there's a question that they have on your bank statements. Maybe there's a question about the property. So there is never a guarantee until the actual loan is funded. But if you go to the fact that we close 97% of our transactions, I think you've got a pretty good assurance of the loan funding. But again, working with experts like Kyle, and the rest of the American Mortgages teams, the issues that many foreign nationals, expats, come into when they deal with a foreign bank or a local broker, or some broker that they contact in the U.S., you're likely not going to have with us. I kind of put it in sort of I guess, an analogy. If you're going to get your Volkswagen repaired, you're not going to go to a Toyota dealer, right? I mean, yeah, sure, it's a car. They're going to be able to fix it. They know they work on cars every day, but they don't work on Volkswagens every day, right? So it's the same thing with a mortgage. Why would you go to obtain a foreign national mortgage to somebody that maybe sees 1 out of 100? Again, this is all we do. Uh, sorry, I went again going on a little bit of a tangent, but to answer your question, there's no guarantee of funds release, but with a 97% close rate, I think you've got a really good team behind you and good assurance that it will fund.
Awesome. Thank you very much for putting that answer together. So I think we're down to our last two. So is it possible to know the approximate mortgage interest and brokerage fees I can expect when closing a mortgage with you at this market?
Yep. So we answered that a little bit in another question. We charge the very standard 2% of the loan amount on a transaction. What makes the U.S. Very transparent, and Kyle had sort of covered this in the very beginning. When you apply for a mortgage, within 3 days, you receive mortgage disclosures. Those mortgage disclosures break down all the costs of that loan. So when you see this and you read this, if you're comfortable with it, and certainly the loan officer will go over it with you if you have questions. But what this notice is, you acknowledge that, okay, I understand this and this is okay. But the most important thing is when you go to sign your mortgage at closing, you're not going to say like, what the hell, Kyle? This is, you told me it was X and now it's Y. That absolutely won't happen. The final figure, the final number has to be at the number that you agree to or below. So when it comes to closing costs, it's absolutely super transparent. Now, when it comes to interest rates, I think probably the easiest way to calculate it is look what a U.S. citizen investment rate is and add about 1% to that. And that'll kind of give you a range. So I think right now we're looking at in the 8s and sometimes the high 7s. But with long amortizations, fixed interest only, it really makes sense even at a higher interest rates. And if the numbers work out, especially when you're talking about the rental coverage loan, then it shouldn't always be about the rate. It should be more about what am I buying this property at and what kind of yield can I get?
So to answer in another way as well, holistic conversations are important. What's most important to you? How are you holding in the asset? So having these conversations during our calls is very important. And then last question, if you have a good Canadian credit rating of more than 800, can you use that to qualify for better mortgage rates in the United States?
Another good question. No. I mean, to make it Canadian. So all we want to see is that you're able to manage and you're responsible for credit. And whether it's your Canadian credit or credit in the UK or credit in Hong Kong, the most important thing for us is we look, are there defaults? Is there foreclosures? Is there bankruptcy? But the score, because they range depending on which country you're in, really, unfortunately, and maybe it should be, and maybe it will be considered in the future, but really doesn't impact the rate. The rate is determined really on the loan to value and how you qualify.
Excellent. So that's all of our questions so far. Maybe we'll just take a look in the chat here, see if there's any comments. No comments there, but to look at other pieces. So everybody, my link, if you would like to book an appointment, is currently in the chat. Please copy and paste it or click on it, and then you can pick a time where you're able to pick a time in order to speak with me as the VP of Canadian markets. I'm local to your time zone within 4.5 from Tofino, British Columbia to St. John's, Newfoundland. And if you live anywhere near the North Pole, you can't really get a mortgage on an igloo. So, and then obviously you can just go to our website as well. We do have other languages as well from Spanish to many other languages as well on our team. So we'll definitely be able to assist. And we do have another Canadian as well, living in Alberta as well on our team. So we can definitely translate the Americanese to Canadianese in terms of that. And then also we do have another announcement to make, that we do have another webinar in 3 weeks pertaining to property management. So we're very excited about that. And hopefully you all have found this to be an informative discussion. And thank you all very much for taking time out of your busy day. I know on the Pacific side, 4:30 to 5:30, everyone's wanting to go home. And then on the East Coast of Canada, we're looking at about 7:30 to 8:30. So hopefully you found this to be informative. If you're interested in our mortgages, reach out to me, Kyle.Mouchen@AmericanMortgages.com. Reach out to me at 778-389-654. If you want to talk to Robert directly, he's also readily available. Probably not many other companies have access to any of our senior leaders. So please, you'll be able to do that. Oh, looks like we got a couple more questions coming in, actually. If you have an ITIN score, does it get you better rates?
It could. So not only could it get you better rates, it might even be able to get you a higher loan to value. So I think that's something that you discuss with the loan officers, depending on the programs that you choose.
And then our last question that just came in, can we get a copy of today's presentation?
Yes. So not only this webinar will probably be available after post-editing in maybe a week, and it gets sent out to everybody that had joined, and also people that maybe had joined that weren't able to attend the meeting. But it's also on our website, so it'll be loaded onto the website. You can find it on our YouTube channel. There's a variety of ways to see it, but not just this webinar. We've done, I don't know how many webinars, 100 webinars. So whether you want to learn about taxes, immigration, EB-5, mortgage financing for commercial properties, whatever it may be, you'll probably be able to find that webinar.
Very cool. And then also our first Canadian webinar for American investing is a first. So very proud as the second largest investment country to the U.S. So we're now over. So thank you all very much for your time. Please, again, contact us, www.americanmortgages.com, Kyle.Mouchen@AmericanMortgages.com, or 778-838-9654. Thank you all very much and have a wonderful evening.
Thank you, everyone. Thank you, Kyle, for having me.